Alright guys, we are back again with another video, and in today's video I'm going to be going over how I made $757 trading Euro futures. This will be going over building confidence in your execution through analysis, and it will be on a Euro USD market maker buy model. So let's hop right into it, show you the charts so you have an understanding of how I actually did this. So beginning, you already know we are going over a blank chart on Euro USD and GBP USD. We have GBP on the left and Euro on the right. Now pause the video before I show my next slide with the annotations to just see if you're getting a grasp as to how I'm actually building my narrative. If price does do this, then I will be able to do that. So pause the video now before I show my annotations on the next slide. And if you had it marked up properly, you would know that what do we need in order for us to even consider an execution? We need a tag of a fair value gap. Boom. Hourly bullish fair value gap tag on Euro USD. Step 2, SMT divergence at or inside of the tag of that fair value gap. Euro USD makes a lower low, while GBP USD makes a higher low, validating this hourly bullish fair value gap to be utilized as an area where we can frame a long entry off of. So since we have step 1 and step 2 on our hourly chart, that allows us to go to the lower aligned time frame, the 5-minute chart, to look for an execution to see what is actually happening when we create this SMT divergence on our hourly chart. So let's go to the 5-minute and see what's happening. But before we even do that, I want to show you dollar chart, because that is also a big factor as to why Euro and GBP were able to move higher today. If you look at the dollar chart on the daily, you could see that we have been in bearish sentiment and bearish order flow. We had last week, we had an aggressive move lower, creating a bearish fair value gap. We tagged that bearish fair value gap here, internal range liquidity to an external range move, as you can see here. After we create and run this external range low, what do? We create another daily internal range liquidity pool. So if price creates another internal range liquidity pool, what am I going to anticipate next? Price to then draw and drop down to the external range low and continue making the lower high and lower low. So that was already the sentiment and the idea and the bias going into this day was bearish dollar, which would allow majors to move higher because dollar moves opposite to Euro USD and GBP USD. Since we have the idea and the confirmation there on dollar, let's look at the hourly chart. Looking at the hourly chart, we have a run of this relative equal high, tagging that daily bearish fair value gap. Then price rejects, drops lower. Below this also new day opening gap that overlaps with an hourly bearish gap. We drop lower from here and we sell off aggressively, violating bullish PD rates, as you can see here, closing below this hourly bearish gap. The overall draw on liquidity being this daily external range low. So we're looking for lower prices on dollar, so we're going to be confirming to look for higher prices on Euro USD and GBP USD. So now we have that discussion covered. Let's go to the execution time frame where we looked for our trade execution on Euro USD. When we were looking for our trade, we have the step 1, the hourly gap, step 2, the SMT with GBP USD. So now that we have this here, we're on warning mode. We're ready to look for a trade execution. But what do we have here specifically? This is where you guys will probably ask the questions. There was no CSD OB entry here. So when I saw that, and I saw that this candle here was a relative equal low with this candle here. This candle actually runs out that low, but if we were able to get an execution on this candle, I would have considered the execution. But I was going into the extra step to frame an execution just in case it didn't actually come down to this specific candle here. And I'll show you that on the next slide. My idea was if price energetically displaces higher after creating the SMT divergence and the tag of that hourly PD array, and we close above this M5 bearish fair value gap, I will use that as an execution for a long entry. And there's no problem with that as long as my stop loss placement can cover the down close candle tag here if we dig deep enough, and the low that has the SMT divergence. So look at what happens next. The next candle actually explodes higher, closing aggressively. And you can see the candle here following this one that tagged the gap, we don't close above here. So I don't even have my execution here yet. The next candle confirms this as an OB CSD, and then this candle violates that M5 bearish fair value gap. So all I did was tell my group while I'm watching this happen in print live, I say I'm longing Euro futures at 105.100. My stop loss is 105.025, and my take profit is a 1 to 2 risk to reward at 105.250. You can see next candle here tags me in, and then my stop loss goes at the low with the SMT. My take profit is a 1 to 2 risk to reward strict. And I had a partial break-even point when price ran that resting high here. So at this point, I took off a contract, moved my stop loss to break even, risk-free trade, and I let the trade go to the full take profit. And as you could see, we smooth run to the resting highs on that 1 to 2 risk to reward. But I did leave one contract running. Here's my execution, my P&L. I had one contract that I pushed into profit resting at this M5 candle low that unfortunately came back and stopped me out while I was already in profit, but it is what it is and it's okay. And I did like how dollar still has yet to take out that external range low, which is why I left a contract running just in case dollar wanted to bleed deeper. But that is my narrative build. That is my confidence into my execution going from an hourly to an M5 setup. I had a lot of confluence behind this trade execution and a lot of confidence that allowed me to execute and do this in front of over 100 people. And if you guys do want to see me do my analysis and do my executions and give you an in-depth explanation as to why price is doing what it's doing, you can actually trade with me free for 7 days if you click the link in the description of this video and you want to join the Forever Trading Circle. But if you guys took value from this and you learned from the process of how I'm orienting and navigating these markets during really tough conditions, because I know a lot of you guys have been struggling, but if you want to learn and you want to join, click the link in the description of this video. But keep studying and keep utilizing the foundation of analysis and execution by only taking a trade when a fair value gap is tagged and there's SMT divergence. When those two things happen, you can then take a trade and it will then be the most high probability setup for a bias framework to an execution. And I promise you that if you stick with this long term and you look and statistically back test it, you will notice that this is just a wow factor and will be a huge light bulb in your trading career. But be safe, guys. I hope you took value from this. Good luck, good trading for the rest of the week, and I will catch you all next week for the next upload.